For the next hour, they're going to be the views of Bob Chapman of the International Forecaster, and Bob is going to cover what's going on financially. Now, people say, oh, well, we know things are bad, but they're getting better. And the trouble is they're not getting better. They're going to get a lot worse. And the great majority of our citizens, not only in this country but throughout the world, are facing a period of chaos and crisis and ready to breakdown of society. Bob, thanks very much for being with us. It's always good to have you here.
Well, you're welcome, and it's always a pleasure to be with you.
Why don't you bring us up to date with the latest cutting-edge things? Boy, the stock market's certainly been doing well this last couple of weeks, hasn't it?
Well, it's on low volume, and it's based upon flowery earnings from financial companies and others that are all positively affected by the fact that they're not valuing their assets the way they should be, and among other things. And there's no recovery in sight. Nothing's going to happen. There's nothing good going on. And the stock market has been operating on very low volume, the lowest since 1993. And as you know, we have black box computer algorithmic trading going on. And that makes up probably 70-80% of the market. So there's not many people buyers in there. And so once the market starts down, which it will soon, then I expect that there's going to be a lot of consternation in the investment world. I mean, there's so many things going on. We got a dollar that's in the process and has been for the last couple of months of collapsing. I mean, it went from 89.5 down to 78.5, and that's quite a correction. But I think by the end of October, I think it's headed down to 71.18, and that could cause a lot of trouble. And the people who are piling in the market here are crazy. I mean, the market must be up 60%, 55% from its lows just 3 months ago. And we saw the same kind of a rally, and it came in 3 stages, actually, in 1932. So I just think it's a replay of a government-sponsored rally, which will turn around and bite its participants. And so I expect it's going to fall and probably go back down and test where it was. And this time I think it'll fall very quickly. I don't think people are going to have a chance to get out.
What about the earnings? All we hear about is how great Goldman Sachs did on their earnings, how great J.P. Morgan did on their earnings. Of course, some of the other banks apparently they tell us they did pretty good. Of course, a lot of them, got large infusions of money from the U.S. Treasury, and as I've said before, if the U.S. Treasury was to give me $12.5 billion as they did to both J.P. Morgan, Chase, and, of course, to Goldman Sachs, I could show a profit of about $3 billion in the second quarter. I think almost anybody there in the audience could. But what would happen if we hadn't given them that money? If we funneled through AIG into the pockets of the very wealthy Brotherhood of Darkness banks? We'll be back in just a moment. Well, this is Dr. Stan, and certainly Bob was just saying that the FASB, and that has to do with the government bureaucracy that tells banks how they will rate their assets because they have to put in quarterly reports. They're simply suggesting that the banks can no longer lie, which is what's been going on. They call it mark to model. They make a model and they say, well, that's what we think our assets are worth, or they're worth $100 billion, but of course they're really only worth about $3 billion. But of course, look how well we're doing. But if they have to do mark to market, that's what they would actually bring if they were put on the market, and it might be only 50 cents, 40 cents on the dollar. So you think they're really going to return to that? Because if they did, it would have devastating effects on the assets of so many of our major banks?
Well, I think there's a good chance of it. Their peers within their industries are really complaining loudly. I mean, what's the sense in having this board when politically it's changed at every juncture, whatever any president wants it to be? And, that's not right. And you know what? Accountants are very punctilious types. I mean, everything has to be in order, in a row, and everything has to prove out. Well, how do you prove out a security that hasn't traded for 9 months, but the last trade was at 30 cents, and how can you carry it on your books at 80? I mean, it defies reality. And so they don't want to lose their reputation as accountants or as accounting firms, and that's another factor. So I think we're going to get the changes back somewhat to what they were. They're using another route, and I explain it in Wednesday's issue of the International Forecaster. You'll see it in there. And for those who want free copies, well, then you'll get to look at it. There are changes coming. There's only so long that they can get away with all of this folderol and lying and bogus this and bogus that. It eventually, and sometimes it takes a long time, I know that, piles up, and all of a sudden the branch breaks, and you and the economy and the financial structure and the markets, they fall to the ground. And it's going to happen. And, I hate to bring this up, but I've been right about just about everything. And, yes, the rally in the market did go higher than 8,500, which I had it as a top level. But in these markets today, when you have your government manipulating the markets, then, all bets are off. They can do what they want to do. But they can't do it indefinitely, and that's what the problem is, because the markets are far better than what they should be. And so I think that we're going to see some changes. I don't think they're far away. Probably by the beginning of the year, because they're talking about it, and they've lost faith, the FASB. I mean, how would you like to be a professional organization? Everybody laughs. They have one rule and they change it next week because somebody calls them from Washington. I mean, that's the eternal, total insult and to a profession. And we're talking about the entire accounting and auditing profession. And so I think the help that has been received, that has allowed particularly financial firms to falsify their books, is going to come to an end. And most of these banks and brokerage houses and insurance companies, they're bankrupt.
Well, what's going to happen to CIT Financial, that's CIT Financial, because they are the major source of loans for between 950,000 businesses and small industries and 1 million small businesses and industries. And they apparently were going to arrange a $3 billion holdover loan so they can meet some of their obligations at 13% interest. But when you're lending money, and you have to borrow it at 13%, you got to lend an awful lot of money before you can make up for that 13%. Do you think CIT is going to survive? Because of course, if it doesn't, it'll bring down almost 1 million businesses with it.
Well, they can't let it go down, and so they've already received $2.4 billion. I think they're TARP funds from the Fed, and now they had a private injection of approximately $3 billion, and that might bring them up to snuff, so to speak, but they need a lot more than that. My estimate is they need another $5 billion, to get rolling. I mean, companies can't get loans. There was somebody was reporting today on one of the programs I was on that some gentleman who owned a business couldn't get a loan in a very good company, blah, blah, blah. And he went up and he says, I'm going to sit on the roof of my building for everybody to see until the bank gives me a loan.